Hey investor friends, I'm Michelle Markey, and today I'd like to share Charlie Munger's updates at the Daily Journal Corporation's annual meeting that happened on February 24, 2021, and as a precursor to the wisdom and insights he expands upon during the meeting's Q&A, I'd also like to share some of his little nuggets of information he had from his one-page chairman letter for DJCO or Daily Journal Corporation, and they include things like after many years as a cash cow, the company's newspaper business was down 14% because of COVID-19. But on the flip side, the company's more important software business was up 12% and it finally broke even, and it was up based on revenues from the prior year. And furthermore, he said that the company had a large trove of liquid wealth which was based on multiplying the company's newspaper business earnings and seizing opportunities of a type no longer available. And he said that the company's marketable securities increased by 45% from Q3 2020 to Q4 2020, which is incredible. And he said to not expect that kind of result in the future. And he said that the stock price of the Daily Journal Corporation hit around $404 at the end of 2020, and that this price was driven largely by much speculative frenzy and much forced index fund buying. So I thought that was pretty interesting for Charlie to set the stage for what he would say during the meeting itself and what many people had questions about. If you also enjoy learning worldly wisdom from legendary investors, I'd love if you could please like and subscribe. And if you watch the meeting, I'd love to hear from you in the comments about what you thought about it. Thanks. Today, I'll share my favorite highlights of what Charlie said, including how new brokers are luring the gamblers in, and he thinks it's a dirty way to make money. And somebody better give the man a tool because he laid down the hammer on brokerage firms like Robinhood and others. When asked what he thinks is the most egregious, wretched excess in the financial system, Charlie thinks it's momentum trading by novice investors, lured in by new brokerage operations like Robinhood, and he thinks it's very regrettable and that civilization would do better without it. And he also thinks that Robinhood's trades are not free. When this brokerage firm pays for order flow, they're probably charging more money to the users and pretending that it's free. He thinks that it's a very dishonorable, low-grade way to talk and that nobody should believe that Robinhood's trades are free. And he said that human greed and the aggression of brokerage firms are causing bubbles from time to time. Someone, having read Charlie's letter, asked, how can investors better cope with the current frenziness we're experiencing in the stock market? And Charlie Munger responds by saying, since we have a market economy, we do get these crazy booms. And he says, remember the dot-com bubble where buildings in Silicon Valley were running at a huge price and then a few months later they were vacant? And then he also says how you get shareholders frequently crowding in on buying a stock and then they buy it on credit, and they do that because they see it's going up, and his policy is just to ride it out because he thinks it's a very dangerous way to invest. And he says that shareholders should be more sensible and not just keep gambling on stocks. Another person asked about the recent GameStop short squeeze and the implications of it, and if it involves the standard causes of human misjudgment as was outlined in Charlie's Almanac, the book. And Charlie said it certainly does. And he thinks that you have this happen because people are gambling with the liquid stock market the same way they would with racehorses. And he says that this frenzy is caused by people who are making commissions and revenues off this new bunch of gamblers. And he thinks it's very dangerous because we could have clearinghouse failures. And what that means is that if a lot of collateral is tied up in clearinghouses and it can't be resolved quickly enough, there could be a spread of problems throughout the financial markets, which would be really bad, and billions of dollars could be at risk. And then also, he thinks that it's not great to have a culture that's encouraging gambling, and he thinks that you should make your money in the world selling other people things that are good for them instead of gambling services. When asked about the future of DJCO, Charlie says that he hopes the newspaper business will survive, but that's not a sure thing. And he says that he hopes that they'll succeed in their software endeavor to help automate the court system, because a lot of court proceedings went to the internet during the coronavirus pandemic, and that trend is likely to continue. And like CEO Jerry Saltzman said to him after breakfast, you wouldn't want to invest in a parking lot next to a courthouse. And he thinks that you have a country like Estonia, which is pretty cool, by the way. I've been there and it's very medieval and castle-like. And in Estonia, the whole country's on the internet, Charlie said. And he thinks that their software business is not similar to Microsoft because they do a more difficult process of request for proposal or RFPs that involve selling software to the government. So that's a little bit harder than the way Microsoft sells their software. But Charlie said they love the business anyway, and it's doing a very big public service. Charlie was asked to share some stories and his fondest memories of his close friend Rick Guerin, and he said that Rick was always great company, courageous, generous, and he was a kidder. He liked to kid people, and he was always jumping out of airplanes and parachutes and running marathons. And he was part of a group consisting of Munger and Buffett that bought control of blue chip stamps. And on another occasion, Charlie did daily journal with him. And he said that he took the Navy's IQ test and got one of the highest scores and even left early. And he said that doesn't happen. And he said Rick was always humorous, always intelligent. And as an aside, one time when Monish Pabrai was hanging out with Warren Buffett, he asked about if he was close with Rick throughout the years, and Warren Buffett assured him yes. And he said one of the stories of Rick was that he was in a hurry to get wealthy, whereas Warren and Charlie were not in a hurry to get wealthy. And that might have led to some of why Rick sometimes had some troubles in over leveraging and trying to make huge returns on the stock market. And in fact, Rick had at one point a better track record than Warren Buffett. It seemed like he was a little bit of a daredevil in trying to really do great in the stock market. And Warren said that he was just as smart as us, but he was in a hurry to get wealthy. When asked if he thinks there's a close parallel to the late 1990s with the amount of SPACs and IPOs soaring on their first day of trading, and if it must end badly, Charlie affirms yes, it must end badly, but he doesn't know when. And he says that he doesn't participate in SPACs. He thinks the world would be better off without them. And he thinks that it's a kind of crazy speculation where we don't even have a founder picked out yet. And he thinks that the investment banking profession is one where they sell poo for as long as poo can be sold. He thinks that it's a kind of irritating bubble. On the topic of bubbles, Charlie says wise people just stay out of them. And he was asked if he thinks that U.S. Treasuries are in a bubble. And he doesn't think so, but he thinks they're a bad investment when interest rates are so low. And he doesn't know what's going to happen with all these artificial low interest rates. And he doesn't know how the economy will do in the future from all the money printing that governments are doing. Someone framed a question in the context of a past Munger quote, in that it takes character to sit with cash and do nothing, and that Charlie didn't get to where he is by going after mediocre opportunities. And the question also asked if Charlie is now willing to lower his standards, to which Charlie responds that, well, of course everybody's willing to hold stocks at higher price earnings multiples when interest rates are so low. And he thinks that on the other hand, he didn't get rich by buying stocks at high price earnings multiples. So he thinks that in the midst of crazy speculative booms, he's not going to change. And someone asked him if value investing is still relevant in a GDP decreasing world. And Charlie said, that's easy. Value investing will never go out of style, because the way he conceives it, it's always wanting to get more value than you paid for when you buy a stock. And he says some people think that value investing is going after companies that generate cash flow but are lousy businesses. but he says that every value investor wants to get more value than they paid for it. Charlie regards it as absolute insanity that a lot of people think investing in 100 stocks is a lot more professional than 4 or 5. He thinks it's much easier to find 4 or 5 stocks to invest in, and that he's comfortable with, that he thinks he knows something and has an advantage, and that he has a reasonable chance of doing above average. And he calls diversification de-worsification. Someone asked, shouldn't DJCO have the same standards as Berkshire, in which Berkshire sold its Wells Fargo stock, but DJCO has held on to them? And Charlie said that sometimes there are different considerations, like with taxes, and they don't have to be the same. But there's no question that Wells Fargo disappointed long-term investors like Berkshire Hathaway. And he says that there was management that, although they weren't malevolent, they exhibited terrible judgment in a culture of cross-selling where it was a bad incentive system and customers got poorly treated. He understands why Warren Buffett got disenchanted with Wells Fargo, but he's more lenient, and Charlie expects less out of bankers than Warren does. But he said that when banking is run intelligently, it can be a very good business. When asked what's the biggest threat to banks, Charlie says that he doesn't know the future of banking or how the payment system will evolve, and he says that a properly run bank is a great contributor to civilization. And he said that just like he doesn't buy gold, he doesn't buy Bitcoin, and he doesn't think that it will end up as a medium of exchange, that it's too volatile. And he likens people buying Bitcoin to an Oscar Wilde quote, in that it's like fox hunting, and that it's the pursuit of the uneatable by the unspeakable. When asked about if he thinks electric vehicles are in a bubble, he said that for 5 years, their investment in BYD autos didn't do anything until recently when they hit nosebleed prices. And he thinks that is cheap compared to Tesla. And when asked if he has a system for selling, he said that he doesn't really have one. He's just learning as he goes, which I found interesting. And he says that as long as they like the company and the management, which they do with BYD, he says that he tends to stay too loyal, and he probably won't change on that. I love how Charlie says that Costco has one thing that Amazon doesn't, and that it's people really trust Costco to be delivering enormous values, and that Costco has a better reputation for delivering value than anybody, including Amazon, and that's why it's a danger to Amazon. And I tend to agree with that. Hands down, I love Costco, and I try to stay away from using Amazon, quite honestly. I'd also like to bring up some of what Charlie said in his December 2020 Caltech interview, and he brings up the concept of how long-term business success is a lot like biology, where individuals die and species die eventually, just like a lot of things that used to be prosperous have faded away and moats have been destroyed. And then there are new moats that come around. And then he also talked about chess in this, and he talked about how it's hard for ordinary people to become great investors. And he said that he was able to master the right temperament, and you don't want to be a one-legged person in a butt-kicking contest. When asked if the pace of rapid innovation is reducing circle of competence, Charlie said, of course, if someone brings in new tech, you're at somewhat of a disadvantage. But if it's fixable, remove it. If it's unfixable, learn to live without it and fix what can be fixed. Otherwise, what can you do? And he said, what you can't fix, you learn to endure. Charlie says we should study the life of Singapore Prime Minister Lee Kuan Yew, who has the best record of being a nation builder in the history of the world. And he said that his mantra was very simple. It's to figure out what works and do it. And he says that he kept at it, and if something didn't work, he figured it out and just kept at it until things were figured out. And he says it's so simple. And Charlie says he admires him so much that he keeps a bust of him in his house. Charlie also thinks it's a mistake when investment management firms hire an army of people to make decisions. He thinks that investing decision power should be concentrated in the one right person, just like in the Li Lu investment management. My favorite thing that Charlie was asked was, what is his wisdom to live a happy life? And Charlie said it's very simple. The first rule is to have low expectations, because if you have unrealistic expectations, you'll be unhappy all your life. And so I hope that's a great takeaway, because there's so much that could be said for what went on in this meeting, and I hope you'll watch it so that you get as much wisdom out of it too. And if you enjoyed this video or learned something, please like and subscribe. Till next time,